Man, what a workout this morning. What a workout this morning. Hope you guys enjoyed it. That was the last of our grid series here on your Feel Good Breakfast Show. But right now we are back with our certified financial planner, Grant van Zyl, talking about interest rates and the worryingly low literacy when it comes to finances in South Africa as well. So Grant, let's talk about interest rates. All right, let's unpack it. Let's start with the beginning. What exactly is an interest rate? What does it mean?
Okay, so interest rate is a percentage that the lender and the loaner agree on a sum of money that is going to be borrowed or lent. Okay. And the interest that is paid on this sum of money is determined by the sum of money that is borrowed or lent, the term of the actual contract, and the interest rate, obviously, that has been agreed on between the lender and the borrower,
Now, I do know from experience as well, when you go and apply for a home loan, a car finance, interest rates vary. It's never the same. You get your prime, which is a fixed set interest rate, but then from person to person it varies. So how does it work? Who sets that interest rate?
Okay, cool. I think this is a great question, actually. I think to unpack this, I think let's go back a little bit and understand where it all starts from. So the Reserve Bank is the great place that sets the benchmark for the interest rates. And basically what happens is the Reserve Bank lends money to commercial banks if there's a shortfall of funds. And the rate that they lend the money to commercial banks at is what we call the repo rate. Commercial banks obviously want to make a profit, so what they do is they add a few percentages on top of the rate that they can lend money at, and we now know that as prime rate. At the moment in South Africa, a repo rate is sitting at about 7%, and the prime rate is sitting at 10.5%. So you can see there's a 3.5% difference, and that's how the commercial banks kind of make their money. If we look at 3 to 4%, most people will say, what's the difference? You know, it's not really a big deal.
It's a big difference.
But if you take 20 to 30 years and you add on just 1% extra, it is astronomical,
All right, so give us an example of let's say you go out and you buy a home. I mean, how would it affect your repayments over the number of years?
Yeah, so a practical example is if you take R1 million home, without transfer fees or without bond registration costs or anything like that, and you've got a period of 20 years, so a normal home loan, with a prime, which is 10.5, you're going to be paying 2.4 million rand for that home over 20 years' time. So you can see the interest portion is almost double the amount of money that you're lending.
So at the end of the day, the sooner you're able to pay it off, the better for you.
Most definitely,
So this is what we should aim for.
Yeah, totally.
Grant van Zyl joining us live on your Feel Good Breakfast Show. Stay tuned. We are going to be continuing our discussion around interest rates this morning. Right now, let us quickly find out what you can still expect on your Feel Good Breakfast Show.